Welcome, 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 folks. Welcome to YRU, Young and Rich University. Why are you not rich? We are wealthy parents raising wealthy children. She says if you need money now, then it's obviously too late. You didn't pre-plan in the past. You're not planning now, and there's no plan for the future. Money does matters. We are real people with real issues, looking for real results. On our platform here, we have all the professionals coming on board to give you the right knowledge so you can take action to get the right results you're looking for. But my guest today, she's passionate about helping families create a better financial future. She holds over 20 plus years in corporate as a CPA, CGA, and an FCCA. She holds a master in business administration. And she said, Frank, I'm a Jamaican by birth. And she moved to Canada in 2012, a mother of three with her family. And her job is to develop business owners, entrepreneurs, self-employed professionals. And she wants to add real estate investors to her profile. Ladies and gentlemen, give me a warm welcome. No other than Cardeen Williams. Cardeen, how are you doing?
I'm doing great, Frank. Thank you for the intro. It was awesome. And I'm so happy to be on your podcast today. Young and rich, that's what we all want to be. That's what we all want for our kids. So let's get it done.
Excellent, excellent, excellent. You have quite an interesting profile. I've reviewed your stuff and I'm thinking, wow, this is a very smart woman. Our community should be very happy to have you servicing us and guiding us on your financial journey and also to enhance our financial journey. So let me ask you this. Give me a background story on you.
Well, as you said, Jamaican by birth. I consider myself to have been always an accountant, always thinking about money, always thinking about how I can grow it, right? When I was younger, I was the family banker. If anybody needed change, then they could come to me and find cash, right? So that's
Yes.
where I started. I had my time in audit, in the banking industry, and I found out that there is so much that we don't know, so much that I didn't know, even having that kind of a background. And when I found that information, it was liberating. And part of what I do is to help others create that same freedom for themselves by providing that information, that knowledge that there is more out there that you can do to grow your wealth.
Excellent, excellent. And did you just jump right into an insurance advisor or you had a transition process?
Well, I was doing it part-time for a few years before I decided to go full-time. And how I fell into it, right, was, I was grinding at my desk, doing my accounting stuff, and I was just there thinking, OMG, if I don't find something different, I'm going to die at this desk, right? Because you know how it is, especially here in Canada. You just do the grind. You go to work, you pay the bills, you go to work, you pay the bills, you go to work, you pay the bills. And if you don't break that cycle, right, it's unending. So
Right.
someone presented the opportunity to me, because where I was getting as a pension, right? I would not be able to survive on it. And hence why I thought I'd need to work forever. And she shared this opportunity where I could actually grow my wealth, tax exempt, creating my own retirement plan, right? Can you believe
Interesting.
that? Create my own
Yeah.
retirement plan. That add comfort to me, right? A solution to a problem that I couldn't think of a solution to. And with that opportunity came also the opportunity to do the same thing that she was doing, share that information, help others create that same freedom, get that same control over their future. So of course, I jumped at that.
Excellent, excellent. So we're gonna address the elephant in the room because um, I'm a big fan of insurance and
Mhm.
mutual funds and all that financial wealth building stuff. Also knowledge towards the journey. But let's address the elephant in the room. Our community is have a little bit of a resistance, or they're not as what we call very forthcoming or aggressive when it comes to insurance. Why do you think that is?
I think it's more a lack of knowledge about what the product is, what it offers, and what it does, right? If you look in our community, we have a situation where somebody passes, everybody is scrambling to gather cash to bury that person, asking that auntie, asking that uncle, asking that sister, right? But there's an alternative, and the alternative is have a plan with insurance included, right? And to
Right.
me, if we have a certain level of pride in in who we are, what we do, we want at the end of our day that we go with dignity, right? Nobody's scrambling
Mhm.
and begging on our behalf to cover our final expenses. And we have that culture that we need to break. It's a lie that we believe, and we need to discredit that lie. And we can easily look around for the evidence of how insurance works to discredit that lie, right? But again, it's us wanting to break that belief with evidence that is untrue.
Right. So, in that process, do you think that do we need more education, more information, or more a clearer understanding of what the insurance can actually do for us?
Yes, definitely that would help. And you know what? Talk to people who've had experiences where they benefited from a death benefit payout, right? That's a basic benefit of insurance. That's its basic benefit. There is so much more too that it can do. But talk to others, people who you saw didn't struggle when somebody passed. They had a sense of calm and peace, right? About financial situations. They weren't you know, weeping not only for the loss of that loved one, but also weeping because of the burden that was left behind, right? So if we can find examples, and that's easy to find, especially in Canada, where our culture here is different, right? People do take advantage of these tools that safeguard their loved ones, right? And we, as a people, we need to take a page out of the books of others who've successfully and efficiently used these financial tools to grow the wealth of their family.
Excellent. I'm a very living example. I personally have seen insurance assist family. Somebody I know personally, he went to work one day and he ended up with a chest pain. He went to the hospital. They gave him what do they call it again? They gave him some painkiller. He went home before his kids and wife got home, and he passed. And unfortunately, he was very young, only 39 years of age. He had three rent. He had it's personal home and two rental properties. Insurance not only paid off the primary residence, it paid off the two rental properties, and had enough money for his two kids to have educational funds set aside. His wife was still young; she's in her 30s, and here she have her young husband pass and leave her with two children. But she had enough money to cover all expenses, bury her husband peacefully, and continue living her life. And I think that's a great way to plan your family.
Yeah.
And this is what you talk about many times and explain to us. Where just planning properly would save you a lot of time, because you already have the burden of here you're losing a loved one or a spouse. Then on top of that, you have a financial burden to deal with. This double burden on you. So it's pretty good. So I like what you're doing. I respect what you're doing, and I'm a big fan of
Thank
anyone that's
you.
doing educational process and create good financial product to help our community. But let's fast track things a little bit more, and I'm going directly to you because you have something different offering. You said, Frank, you compare real estate with life insurance, because I'm a big real estate fan. I do a lot of real estate investment. I have a lot of real estate investors who invest with me and around me and all this kind of stuff. So
Mhm.
explain that to me. How could you pair real estate with life insurance?
Well, guess what? When you get into real estate, you're accumulating assets, right? You want to build an asset that you can leverage in the future, that you can generate income with to provide for your family, that you can possibly pass on to your loved ones, your kids when you go, right? Insurance does a similar job. But guess what? It takes less money to start with. When you want to buy real estate, you have to have a significant deposit, right? 10, 20, or even 30%. With insurance, you can start creating that same asset, a similar asset that you can leverage in the future, that you can use to support you with tax-free income, which is different from real estate, and also create a legacy that you can transfer to your loved ones. And again, that happens tax-free as well. So it's not all insurance that is created equal. The offering that I'm mentioning is within permanent insurance that allows you to grow cash value over time.
So,
Just
let's
like
hold
how
on. Let's hold on a second, Cardeen. So we going to a whole life policy.
there's more than one option for
Okay.
permanent, right? You have a whole
So,
life and you have a universal life. So there are two
so
options that you can go with for a permanent policy.
so we doing a whole life or universal life with a cash value, and how does a cash value contribute towards my real estate investment portfolio? Go ahead.
Well, what I recommend for real estate investors, if they already have properties, right? Especially now we're in such a highly taxed environment, you want to create a wealth warehouse, right? That you can grow your wealth in tax free and then access that cash with tax free. So for existing real estate investors, I would suggest put some of that cash flow into a policy. It's tax sheltered, it grows tax free, and it's an asset that you can actually leverage with an insurance company to get cash back to go pursue your other investment options.
Wait,
So
wait,
you're
wait,
not
wait, hold on.
locked in.
Hold on a second. Hold on a second. So you saying to me, so I have an investment property. Let's do a rough example. I have an investment property give me $1,000 a month in positive cash flow. You saying take that $1,000 a month because you really don't need it right now. Put it in a whole life or universal life policy. That policy gonna grow my $1,000 per month to a higher value 5, 10 years down the line. Is that correct?
Yes, and it's a portion of that $1,000, right? Because a portion does go to the cost of insurance. That's basically gives you that income protection for your family, right? And the other portion goes towards the saving or investment portion of your policy. Whole life and
Perfect.
universal policy, they work differently, but that's
So
another
now,
kettle of fish.
so now, 5 years down the line, that's $1,000 a month. That's $60,000 potentially. If it grows, let's say it's $80,000, $90,000, depends on the performance, right? I can now take that $80,000, $90,000 tax free
A portion of it, leveraging it
portion of it.
with the insurance company using a policy loan, right? So your
Mhm.
asset stays intact, it keeps growing and working for you within your policy. You leverage that asset just like how you'd leverage your equity in your home for a HELOC or a second mortgage. And you take that cash and you go do your thing, whether it be to buy another property or pursue other investments, but you'll again be earning additional income that you can rinse and repeat, right?
Excellent, excellent. You hear that, folks? That's a good strategy. So that's one way of leveraging life insurance. You're getting life insurance coverage, and of course, you can tell me if I'm wrong here, Cardi. I'm trying to understand. This is very slow. And if there's a disruption in my lifestyle, or at that particular time, I still getting coverage from the life insurance policy to cover my debt.
Okay. What do you mean by disruption? Let's clarify.
So, yes, for instance, I'm taking this money from my property, putting into a life insurance policy to grow this $1,000 per month.
Mhm.
Let's say, think on forbidden, I pass during the process. I'm still getting life insurance debt coverage on my life as well.
Yeah, exactly, right? For pennies on the dollar, right? Because remember,
Mhm.
what you put into a policy is just a small fraction of what you get out as a death benefit. So for pennies on the dollar, you'd have passed on to your loved ones should something happen to you, and they would have been able to hopefully pay off all that debt. Because guess what? Real estate investing is a debt heavy business, right? So pay
Absolutely,
off that debt,
absolutely.
and guess what? Your loved ones have those investments, those assets that you bought free and clear, right? And that is the type of legacy we want to leave for our children. Not
Absolutely,
debt,
absolutely.
not
So
tax burdens, but a solution and a leg up, right? And that's what insurance does.
excellent. Thank you very much for that. So let's address something else being lingering for the last little while. The government has introduced the capital gains taxes to increase it beyond a certain percentage based on X amount of gains. Okay, how do I use life insurance to better help me or my next generation if we have high gains?
And that's the thing, right? I love real estate. I'm also a real estate investor. But what happens now, because the government has increased the capital gains tax to apply to now 67% of the gains, that means more taxes are due. So if something happens to us, right, Frank, our portfolio is considered immediately disposed of at market value, right?
Right.
So the tax bill becomes due. The debt becomes due, unless, of course, there's a rollover element to our portfolio, right? But aside from that, the tax bill becomes due, the debts become due, right? Estate taxes, probate, all of those fees kick in. If you do not have a life insurance policy to help you pay those out, a chunk of your portfolio will be handed over to the CRA. How would that
Right.
make you feel, Frank?
Not very good.
I'd be pissed.
Of course,
I'd
not
be
very
pissed,
good,
right?
especially for someone like myself who've been investing since I'm 2 years old, pretty much. Actually, let me see that. I'm from 22. I started investing in real estate, so
Yeah,
I've been on this journey for a long time. So to have a lot of my money transfer over to the government, not that I'm opposed paying taxes, but I just want to pay fair taxes.
yeah,
So
exactly.
so have my money transferred to the government and leave less for my next generation, I'd be very annoyed with that. So you're
Yeah,
saying there's a way to use life insurance to protect all that
yeah,
tax burden as well.
yeah.
Very
Because
good.
the alternative is that your estate or your loved ones would have to sell off that portfolio in order to pay the taxes, right?
And
So
that's not
think about
allowed.
the alternative. They'd have to sell
Yes.
it off.
Mhm.
And the other thing too, how long would that take? Months? Probate process is at least 6 months, sometimes years. And
Yes.
during that time, how does the family live? So we have to take all of
Well,
these into consideration as well.
it can take months if it goes normal. If there's any resistance from any other family member, that can go on for years, as you said. So
Yeah.
people pay attention to that. Probate can take a long time. So what about creditors? You owe creditors, and you passed or in a certain tight situation. How does life insurance assist with creditors or any someone taking legal action against you?
Well, during your lifetime, while you're building that storehouse of wealth, right? If you want to protect it, because asset protection is a big deal, especially when you're in real estate, right? And things happen. A
Mhm.
slip and fall could be quite catastrophic if somebody wants to file a lawsuit,
Right.
and they can basically go after, if you have your assets in a corporation, the assets of that corporation, if they're individually held, all the assets that you hold. But guess what? If you have a wealth warehouse, because that's what your insurance policy could be, a wealth warehouse, and you have preferred beneficiaries named, for example, your parents or your kids, your spouse, guess what? That can be creditor protection, protected. They can go after all the other stuff and probably succeed, but that is creditor protected because a preferred beneficiary is named. So again, I've heard situations where persons have gone bankrupt, right? And they lost
Mhm.
their assets, but that asset, they wish they had more in it because it would have been creditor protected.
Excellent. Thank you very much for that. So this is we just address a seasoned person who have all the ducks in a row. They have the finances, they have the real estate going. They want to add life insurance to the portfolio to keep it balanced or keep it more protected. And that's all fine and good. Let's rewind the clock a bit. I'm just coming out of university, got my first job, got my first rental apartment or my first home, or not even the first one, first rental apartment, or sometimes still living at home. How do I start this process? Let's say I'm 21, 22 years old. How do I start this wealth building journey with yourself to start me getting some assets or some form of protection?
Well, one of my theories is that you can create the life that you want, right? Create the retirement that you want. And the earlier you start, the better. Because a person at 21, when they should want to, say, apply for life insurance, it's cheaper they're likely in good health, right? And they have time to their advantage. Time is something that we do not get back, right? A person at 21 has that time. And what investment needs? Time to grow, whether it be real estate, whether it be your life insurance policy, the more time, the more it can grow. So taking out a life insurance policy at the age of 21, you're locking in, especially a permanent policy, you're locking in your insurability. If you use a permanent policy, you are able to start with even smaller seeds, right? To build your wealth. And the other thing too, a lot of people, I found that in Canada, even if you find a job, there are so few companies that actually provide you with a pension, right? So you actually have to take control of your own retirement planning. And the earlier you start, the better. So a person at 21, get a life insurance policy, lock it in. 20 years, you're paid off and you don't have to worry about that risk anymore, right? And you can
So,
use that tool to grow your wealth as well.
so give me an example of start small, because we talking just a university. You have student loan, you have a car loan, you have rent. What's starting small? Give me a rough example.
Well, I'll use my kids as an example, right? My 18-year-old, she got her policy, my biggest one, she got her policy at 18, right? She started with $100 per month, right?
Well,
She's working part-time at that point. She can afford it. She lives at home. She doesn't have any bills, right? So that's a great place to start. My younger ones, they have their own policy. I own that policy. I fund their policies. But guess what? When they become 18, I will transfer that policy and all the cash value in it to them that they can use to start their lives, whether it be pay for their education, buy their first car, deposit on a home, start a business. They'll have that nest egg that I've created over time for them to leverage in their future. And they won't have to wait until I pass to get that legacy, right? To benefit from it. I get to see it in action, which is great.
there you go, there, folks. She said you can start as little as $100 from 18, 19 years old, just at university, just at the college, 20 in your 20s. And if let's assume at that time you cannot afford to buy a property because you don't have any huge cash savings, she says you can use that money, create a policy, pay it over the next 3, 4, 5 years, and build up a nice little savings there to potentially. Can we use some money from that policy to buy our first property at least, or a portion of it, Cardeen?
Well, guess what? It depends on how much you put in, you get out, right? So if somebody at 18 is starting with $100, years down the line, they might not have enough for a deposit. So we're being real here, right? It's still
Right.
regular returns that we're getting inside that policy. So if you wanted to build a nest egg that you can use for to purchase a property, you would want to put more into that policy, right? To create that cash value that you can leverage, because that's what will determine how much you can borrow.
So okay, so that's good. Thank you very much. So what's the risk of not having life insurance?
Guess what? As a young person with no assets, no dependents, no liabilities, the risk is less for that person, right? So that might not be the goal. The goal might be to create wealth. But for somebody like yourself and myself, Frank, we have kids, we have assets, we have liabilities. If we don't have life insurance and we pass, right? We know that we need 2 income households to survive, right? We could lose the homes that we live in. Our kids might need to go live with relatives. I've heard stories like that, right? One member of the family passed, no life insurance, they lose the home. The kids have to go live with relatives, right? Somebody actually ended up homeless because they didn't have life insurance. They lost the home and had to live in their car for a while, right? So these are like worst case scenarios, but the thing is, they happen, right? So we know that death is certain. As you said, we don't know the timing. Your friend passed in his 30s, right?
That's right.
There was no warning. No warning. He wasn't sick, right? And life changes suddenly. We do not know when, and we should not gamble with the future of our families. Because guess what? There's a solution for out there. If you're on a tight budget, there's an alternative for you. If you want to use it as a tool for investing, there's an alternative for you. There's no real excuse not to have life insurance. The fallout is too great if you have a family, if you have assets, and if you have liabilities.
Excellent, Cardeen. What are some of the? I'm trying to. I'm trying to ask questions from not myself and my prime investors perspective. I'm trying to look at a person who's new to the industry or new to the market. I'm trying to get a balance where people feel fairly represented on our podcast. So I'm never going to assume everybody who watch my podcast own 3, 4 properties and have this stuff all together. There's people who sitting and watching who want to own 3, 4 properties and want to get involved in the market, who just bought their first home and they want to understand what they should be doing. So, what are some of the industry trends you've seen in the insurance market when it comes to new homes, and what people should be aware of?
Industry trends, I'm not sure if what is trending is becoming your own bank, right? People are on that bandwagon, becoming your own bank, be your own banker, all of that stuff, right? And that is using permanent life insurance policies. Some people prefer a whole life, right? And that works if you're risk averse. And some people would want to use a universal life to build that cash value inside of, right?
Mm-hmm.
So that would be part of a conversation that you'd have with your advisor. But the trend is you want to be in control of your money. You don't want to be begging a financial institution when it comes time to apply for a mortgage, right? You have to do income verification, credit checks, all of that. It's like blood. They want blood, right? So if you've
Yes.
created that store of wealth for yourself, right, that you can leverage with an insurance company that requires no credit checks, no income verification, it won't reflect on your credit report, right? It won't impact your credit score. Why not create that asset for yourself?
Excellent. So explain to me. Just going to follow up question on the statement you said just now. What is it about becoming your own bank? What is that all about?
Well, guess what? When I'm going to use my own experience, I've had my
Mm-hmm.
policies for maybe 5 years, right? And as it is now, I've created quite a bit of cash value in it, right? So if I wanted, say, for example, to go on a vacation, I would have the option to use my cash, right? I would have the option to use my credit card, or I'd have the option to use my life insurance policy, right? So if I use cash, that means I would probably reduce my savings account to zero, right? And
Yep.
I lose the opportunity of whatever else I could have used that cash to do. If I use my credit card, I'd be paying interest rates of 20%, right? That's costly. That's high interest rates. But I could also use my policy, right? My policy has that cash value. It's working for me. I have my investments in, they're mirroring the S&P 500 and the NASDAQ. I'm performing quite well, right? I could leverage that policy with a policy loan. My rates now are like 3.9%. I could pay for
Right.
my vacation, whether it be 10 grand or how much ever I need to pay. And I have control. I pay that back on my own terms. I could just
Excellent.
not pay it for months. I could pay it in a lump sum, or I could just
So
pay the
you
interest. So I have
so you
control.
So you're technically taking money from the life insurance policy and lending it to yourself to do whatever you want, whether it's car purchase or investment, so you actually creating your own bank. You using your reserve funds. That's what the bank do, use their reserve funds to let you to do all the things you want to do with it.
Yeah,
That's
so
excellent.
leverage the asset for a policy loan from the insurance company. So what I like about it, it gives you options in your life, right? It
Mm-hmm.
gives you options. And that's how you define freedom. You have more options.
Excellent. Excellent. You're amazing, Carlene. You have a lot, Cardeen. You have a lot of interesting concept and information I think our community can benefit from. We have a couple more questions to wrap this up today. How do you see the insurance industry evolving over the next 5 to 10 years, and how do you see technology playing a part of that?
Well, with technology, just over the past 4 years, right? Even in my business, before it was a paper application. Now I'm able to do my applications online. Before I had to meet people in person. Now I'm doing applications over Zoom. So definitely we will be impacted by technology. We'll continue to be impacted. I assume the process is going to get easier, right? The process is going to get easier and the information is more accessible. So those are two things that will likely come out of our technology as we grow technologically. And insurance industry is keeping pace. We're ever evolving, we're ever improving.
Since you mentioned that of able to do things online and easy access to do application, what do you think or feel about a person who would just go online, Google an insurance company, and just buy a policy without talking to an advisor? What do you feel about that?
Well, people have that option. Personally, I wouldn't do that because guess what? Do you fully understand the details of an insurance policy? Do you fully understand how it can work for you? Right? So I always say, even if you do your research online, kudos to you, do that, but talk to an advisor who has an intimate knowledge of how an insurance policy works, how what product would best suit your needs, match your goals and objectives, right? And also could look at your whole picture, your whole financial picture to see if there are any other risks or opportunities that are available or are in your situation that can be addressed with a product from an insurance company. And just to point out, insurance companies don't only offer life insurance, right? Because we only think of life insurance because dying is a big deal, but life is even a bigger deal, right? Dying is an instantaneous thing. Life is years. And during that time, we might get sick, we might get disabled, we might lose our jobs. All of those things, insurance products can help to address those needs as well. Even your investing, whether you use your TFSA, your RRSPs, or non-registered investments, you can actually go to an insurance company and use those options, right? With segregated funds. So it's not just about dying. It's about how you live your life, maintaining that quality of life.
There you go, folks. She says life insurance is not about dying only. It's about also using it during the time that you're still alive to enjoy a more easy and comfortable life. So there's different solutions or options available to the life insurance policies to help you live a comfortable life for yourself. What about I'm keeping too many questions. You keep talking, I keep having more and more questions, Cardin. What about schooling, investing with life insurance policy for education, university funding for the kids?
As I said, my kids have policies, right? And that policy they can use for anything, whether it be to fund their education, whether it be to start a business or buy assets, right? I know there's RESPs out there. Take advantage of that. But with that, it only has one purpose. Why I like using my life insurance policy or giving my kids life insurance policy, they can use it for anything, right? Whether it be education or another opportunity. And just to clarify, life insurance, yes, you can get riders on it that covers critical illness and that kind of stuff. But there are other policy types like a critical illness policy or a disability policy or even business overhead expenses that can offer income protection for you and your business.
Excellent. Excellent. Very good. Absolutely. Very good. Any final or practical advice you want to leave our guests with or audience with, Cardeen?
You know what? I like to go to the Bible for my advice. And the Bible says a good person leaves an inheritance for their children's children. People, it's not only about today. It's not only about us. We need to take care of our kids because they will need the help. It's not getting any easier, right? And help them take care of their kids, right? So when we talk about wealth, we're not just thinking about ourselves. We're creating wealth for generations to come. And that is how we lift ourselves up as a people, right? So let's do it. Don't be skeptical, or even if you're skeptical, go out there and get the information so you have the tools to help create wealth for you and your family.
It's excellent. So some of the folks who are watching this show right now and like what you're saying, how to get contact with you to ask more questions or to proceed in securing estate with you?
Well, guess what? You can visit my website. It's www.moneymattersca.com. You can reach me at info@moneymattersca.com, or you can call me as well. My information is on my website. My number is 647-951-6905. So Frank, I enjoyed this conversation. We just touched on a few things, right? It's just touching on it. So if you need more information, definitely reach out and we can have a conversation.
Excellent. And we just getting ready starting this podcast, and Cardeen is one of our first guests on episode 1, and we just getting started. And you're not gonna. This is not the first or final time you're gonna see Cardeen. She'll be coming on more frequently. We talk about different things as she says, money matters. As the money as the financial system change in our country, new policies come on board. Cardeen gonna have solutions to those changes. Like for instance, the capital gain taxes increase. She have a solution for that. So you can see more and more of Cardeen in our program. She would probably, if she like us, she can become one of our insurance contributor.
For sure, for sure. And I'm
But
always doing other lives and webinars. So hop on one of those. They're informative. Follow me on Facebook or Instagram. You'll see recordings there that can provide you with more information.
and your Facebook or Instagram link is
Money Matters _C.
Money Mart _. Thank you, Ms. Cardeen Williams. It's been a pleasure having you in our program. And we're just going to enter and exit now. And we see you next time.
Awesome.
Yes, folks, that was Cardeen Williams. She says you're never too rich for life insurance. Don't gamble your legacy by not having life insurance. I said we tired of seeing folks when something go wrong in the family, they're doing GoFundMe just to bury their dead. That's very embarrassing. When you can sit with Cardeen and only from $100 a month, you can change the embarrassment of your family. You can change the tax system of your family. You can change the wealth direction of your family. Again, my name is Frank Corbin. I'm your host from the YRU platform. And the question we always ask everyone is, why are you not rich? You can start off with $100 a month and change the financial direction of your family and your estate to come. I want to thank you for your time. To your success. See you then.
Do I